And those global markets have recorded mixed performance on the first day of this week's trade, but positive sentiment remains as Asian stocks have made gains and European shares have soared. The JSE, on the other end, has closed weaker, while oil dropping, affecting the news of the drone attack on the U.S. troops in Jordan. Let's speak now to independent markets analyst Carmen Mpelwane, who speaks to us about the early signs at the JSE. Carmen, good morning to you. Let's begin with what's expected in today's trade, given the dynamics I've just painted above.
Good morning. So I think the overriding theme for this week will lead into the Fed's decision around the interest rates, which will come out on Wednesday or Thursday. Lots of caution going into that announcement. The expectation is that they will hold steady. We have seen the inflation rate track under 3%. So that's been a positive. So the global markets are looking for the Fed to remain steady. That's definitely going to have an impact on local markets as well. As you've mentioned, started off the week quite weakly. That on the back of, number one, the sentiment in China, or concern there, and risk on the back of China's Evergrande being ordered to liquidate. So that's given a bit of a shake on that side. As you've mentioned, the attacks in Jordan, that's also given some geopolitical tension concerns. So those themes are likely to drive the market going forward for the rest of the week.
Let's immediately launch into company news. Shoprite publishing an operational update for the 6 months, which ended on the 31st of December 2023. Anything stands out for you there?
I think Shoprite, unlike some of its competitors, keeps doing the right thing. We have seen an increase of 13.9% for the half year to end of December. They've guided that this is on the back of a record Black Friday, which again is a phrase that I don't think many retailers will be able to say recently, as well as they've guided the addition in terms of the mass mart stores has given them a boost as well. And Checkers brand continues to be the outperformer in their stable. I think another important theme for them is the continuation of them gaining market share. They've seen a positive run for the past 58 months, which is phenomenal. And definitely, we've seen all around for them, they've been able to improve themselves. They have seen a internal sales price inflation number of plus 7.7% for the period. And having said that, we don't know what the earnings look like at present. They have guided that load shedding is likely to have will have an impact of 500 million for the period as well. So there'll be a keen eye to look out for any further updates before the results on the 5th of March.
Yeah, let's talk ArcelorMittal. Here's a company that's been in the news recently, not for all the positive that we would expect, instead communicating their efforts to save thousands of jobs. Talk to us more about those developments.
Yeah, so not a new development per se. We know that they have been in trouble over the recent months. Having said that, the guidance has been that you will see a loss in their latest results to come out shortly, and that on the back of a 2.1 billion rand impairment related specifically to the steel facilities or the steel plants. So that's in Newcastle and Vanderbijl Park. The impact of the closure of those facilities is likely to be about 3,500 jobs directly. And this keeping in mind our high unemployment rate in South Africa. But I think the bigger impact is the reverberation in the steel industry. So you're likely to see an impact for jobs, an impact on jobs of over 200,000. So deep concern, especially in an election year. Arcelor has said that they are in conversation with the government as well as unions to see if there is a way to salvage this. They've already started the closures, so to have a turnaround, there has to be significant change in terms of policies, I think, and assistance that Arcelor is asking against what they're seeing in terms of scrap metal, where they feel that they are being disadvantaged at the moment.
Let's conclude with the Cash Crusaders franchise, which is seeing a revolt. What's going on there?
So it's been coming on for a few months. We've seen lots of legal action. I think the key here is that it relates to almost half of the non-corporate franchise stores. And what you've seen is that the Cash Crusaders, has come out a few months ago saying they're changing policies in terms of how they will draw revenue. So this is specifically in terms of their pawn transactions. And looking at what the initiation fee is, the ability to charge an initiation fee on a renewal of a loan in regards to this sector. And what the franchisees are saying is that they are unhappy with the removal of that initiation cost. Obviously, that is a big ticket in terms of their revenue generation. I think the issue here has been they've been in and out of court for, I think, over 12 months at the moment. And a judge eventually ruled on Friday in favor of the franchisees. What they then did was remove themselves from their franchise agreements and start a new brand. They bought stock. They have lamented that they already have to sell the stock, so they can't go back into the Cash Crusaders stable. Keeping in mind that this sector for Cash Crusaders contributes about 40% to their royalty fees, so quite significant.
So some internal ructions there. Thank you very much. Carmen Mpelwane is an independent markets analyst talking to us about the movements at the JSE in early trade. All right.